All right, welcome everybody. I'm Tony Babarino. Welcome back to another live video stream. You're welcome to ask questions and answers through the comments. We will see them. Today, bringing you some more helpful free content because I care about my community. I want to make sure you guys get some good information, updated information, and be able to ask questions should you have any. So today we brought back once again Lynn Nelson from Finance of America, and today we're talking about the VA and FHA loans in 2020, some differences and a couple of particular notes that you may want to be aware of or didn't know you needed to be aware of. So let me go ahead and bring in our guest, Lynn Nelson.
Hi, Tony. How are you today?
I'm fine. Thank you so much. Lynn, for people who may not know you, and they will eventually, can you go ahead and talk a little bit about yourself and your company, just so that we know who you are and, well, why should they listen? Please take over. It's all yours.
Yes. Hi, Tony. Thank you for having me again today. Just a little bit about myself and Finance of America. I work for Finance of America. We are a nationwide direct lender. We lend in all 50 states and also Puerto Rico. So we are closing about $60 billion a month worth of loans. And sorry about that. My phone, I forgot to turn that off again.
They're calling you because see how popular she is? They call her all the time for money.
I forgot about that. Anyways, myself, I've been a loan originator for going on 30 years. I was very blessed to have found this business while I was in college and just found a liking to it. And I'm very blessed and still love what I do. So I've been a loan consultant, mortgage advisor, loan officer, whatever you want to call me, for the past 30 years. I specialize in, everything from first-time home buyer to your traditional conventional FHA, VA loans. And we're going to talk about FHA and VA today. So Excellent. Thank you for having me.
You are very welcome, Lynn. And I just put out another note to let people know we are live, just spreading the news. Because when you're excited about something, like I am, I like to geek out on my real estate because I love what I do and I really care. That's why we bring people on like you, that you're solid, you're safe, you really know what you're doing. I feel comfortable with you, and that's why I'm happy to share, whatever you have to share with people. So what we wanted to articulate to those who are listening, and if you're watching this on a recording, you missed the live stream, so don't forget, you can always check out on my website, tonybabarino.com/events. I update it periodically with new stuff, so you guys can catch things like this and ask questions. So we want to talk about the VA. Now, we all heard of VA, and most of us heard of FHA. Things change. So my question is, with VA and FHA, what are some things now? We can't go over everything. It would take 4 hours. But what are some more important things at this time that people who are listening and watching should be aware of regarding an FHA and VA? Do you want to compartmentalize that and start talking a little bit about the VA first and then the
Sure.
FHA, and then go into differences, because people heard of conventional FHA, VA, but let's be a little granular and kind of articulate just quickly, and then the differences, and especially get to what's new or change, because that's going to be the most important thing. So feel free to skip anything you need now to get to the good stuff, and then we can always itemize a few things after that. So please, by all means, take it away.
Tony, so first to talk about VA loans. And a VA loan is, if you're a veteran, it is truly 100%, maybe 95% of the time, the best loan option that you're going to have. And the reason being is VA guarantees the financing. And what that means to the veteran is that as long as they have the qualifications, and you'll want to check with your loan originator to see that you do qualify, they're going to guarantee the financing, and that allows for a little bit more flexibility. One of the main benefits that you have of a VA loan, especially if this is your first home, is that it does not require rent. Sorry about that. That's my other phone.
It's another VA loan calling you.
Yeah. Anyways, VA does not require any down payment. And that's one of the best features, because a veteran may have spent time in the military. Maybe they to college afterwards, took advantage of the military paying for their college, and now they've got this great job making a bunch of money, but they haven't had the opportunity to save. So that's where it's a nice option, is to go with 0% down. The other thing with VA is there really is no loan limit. It used to be that for Orange County, which this is where we're streaming from, that anything above 765, 600, which is the high balance limit for Orange County, required a down payment. That no longer is required. So you can truly, if you can afford, an $800,000 house and you don't want to put any money down, probably if you're purchasing $800, you have some money, but you don't have to. And like I said, with the credit qualifying, it looks at not just what is your credit score, what is your income, what are your liabilities, but it also looks at what is your residual income. And this is where VA is different than any other loan program. They're going to look at your salary is here, your taxes are here, your housing is here, and this is what needs to be left over for your family size. And what that means is if you have a high income, it's likely that you have a large residual income. So on traditional loans, you have certain debt ratios that you have to qualify with, maybe 41, 45, 50 is it's typical for conventional and FHA, but with VA, you can exceed those debt to income ratios. That's one of the big factors with VA.
Oh yeah, that's a great loan too. I'm still surprised to this day. Not every vet accesses it. I suspect, like any human being, people who never bought a home, whether it's a VA, a vet using a VA, or a first-time buyer with FHA, people tend to shoot themselves in the foot. I can't afford anything. I don't have the credit. When asked, could they call you? I mean, not to sound silly, could they call you for free and no obligation and say, Lynn, I'm a vet. The last time I checked, my credit score was this. Here's how much money I believe I have. Here's my income generally. And does that sound like something that might be workable? And then you could just let them know what you need, assess where they are, so they could actually get an answer, whether it's an FHA or VA. Just talking on this topic right now. I mean, they could just call you and you can do that, and they don't owe you anything up to that point, right? They could just ask and you can set them straight. Let's be honest.
Tony, whether it's VA, FHA, or conventional, like you said, there's two things that we look at, whether we're doing a pre-qualification or a pre-approval. And a pre-qualification is where I just take the time, they provide me with their information verbally. This is my income, here are my assets, this is what my liabilities are. And I can manually calculate, what their debt ratio is, and based on the information they provide me, give them a guidance as to what they would qualify for. But what's more important would be for me to actually do a preliminary credit check, because it allows me to actually run their loan through an automated underwriting system, and it will validate not only what I suspect will happen, whether it's going to be an approval or not an approval, but it will validate that information for me. And those services, including a credit report, there is no charge for that ever. So if anyone ever tries to collect an upfront fee, something is wrong. So definitely those services, pre-qualification and pre-approval, are free.
Yeah, I like to with buyers, when working with them, I always like to tell them, don't guess. It's always better, even with me. No one owes me anything. When I'm working with buyers, my compensation is from the selling side. So I'm free end to end.
Right.
With lenders like yourself, let's say I'm Joe Q Public and I think I can't buy anything, or I'm sure I can't. Let's be honest. I could call you, hey Lynn, I got $32,000 in the bank. I've been at my job 3 years. It's a full-time job. I do tech support. And I think my credit score is last time I checked was 700. But I don't want to do anything to feel like I have to use the loan or pay anything. So is there stuff that I could give you just so I can feel comfortable knowing if I really want to do this. I mean, you could take them to that point. Correct me if I'm wrong. Couldn't you take them to a point where, well, Mr. Joe Q public buyer, since you've given me this, everything I asked for, I believe based on all this information, it's all valid. If you were to buy, you can buy something for $485,000. So, and still, they
Yeah.
don't have to pay you up to that point. They could just go, really? And they can contact me, and I say, well, there are some 1 and 2 bedroom condos in Lake Forest or Irvine, for example. They're not brand new, but yeah, we could try making an offer, and you're all set to buy it. Do those payments work for you? Well, actually, yeah, great. Isn't it nice to have the truth? Because there's going to be times where maybe they don't qualify at the time, but we can say, well, Mr. Joe Q Public, based on all the facts you've given me, and I see their facts, it doesn't seem at this time we can give you a loan. But if you do this, and this, and get there, now we have a path to get a yes. So either you're going to get yes now, or you're going to get yes, but you need to do the following things. And even with me and with you, they can just have that conversation. It's not like, oh, you can't buy anything, we're not going to talk to you. We know that eventually you could.
Mm-hmm.
I mean, believe me, even if you were going to pick up and go to Texas, right? It doesn't matter. Well, I would have to refer you out to someone in Texas. But point being is, you get a higher probability of a yes by talking to you first. You're the lender. You're everyone's best friend because they need money. Then when you get them set and they want to actually commit to that purchase, we can go shopping, make an offer, go into escrow, and we want them set up like that. So with the FHA and the VA loans, I don't know the details of the financing because that's not my job, but I do understand the generalities that there are some differences, like with the inspections, right? There are certain classical things we go through in a purchase. You have your deposit, but then you have your home inspection, you have your appraisal, right? Just to cover a couple of things real quick. And there are some nuances, and we would not want a first-time VHA or an FHA first-time buyer to be shocked. So can you, from the lending side, share with people some of those differences of those clearances that they need to be aware of, so they don't go, well, wait a minute, I thought this had to be covered, or, oh my God, it covers too much. So could you articulate from the lending side those inspection differences, and if there's any appraisal differences, and if they back out of an escrow, does that stay with the home? I believe the report stays with the house about, the appraisal stays about 90 days. Is it? Correct me if I'm wrong on that.
Yeah, good questions, Tony. Well, first of all, just like you said, with regards to the credit qualification, we always want to do the steps that the client is comfortable with. And if they're just comfortable first and foremost talking to me and taking 5 minutes, great. They want me a paycheck, great. They want me to run their credit. I mean, it's a process. But with regards to inspection and appraisal, termite inspection, let me tell you what's required. VA is probably the one that's the most different because we have a VA appraiser, and he's going to go out or he or she's going to go out and inspect the property, and they will assess the property, and that is tied to the property. So that is important to know that a VA appraisal has been done. They will require on VA financing, we do require a termite report. So that's one thing that's a little bit different. Whereas conventional and FHA, a termite report is not required. So that's something that you as the agent will advise whether they should put that in the offer or not. With FHA and conventional, with regards to the appraisal, only difference between the two is the FHA appraiser does go into the crawl space. So you will have, for example, Finance of America, we work with fee appraisers. We don't have staff appraisers. We work with fee appraisers that are local to that area. And that's important because you want to have an appraiser who's familiar with the area that they're inspecting. But it could be Joe Smith doing a conventional loan, on one house, but that Joe Smith can also do an FHA loan. So it's usually an appraiser can go conventional or FHA. Used to be there'd be conventional appraisers and FHA appraisers, but it's usually the same person. So when appraisers say, when agents say, I really don't want an FHA loan because they think there's some big difference in the appraisal. There really is not. If it's a loose wiring hanging from the ceiling, a conventional appraiser is going to call that out, just like an FHA appraiser would call that out. So, and like I said, conventional and FHA do not require a termite report, so that's optional.
Okay, and then what in terms of fees? Everyone's always worried about money. So am I, and nobody wants to be surprised. So, would you happen to know, based on your experience or the best of your knowledge, if the buyers ever have to pay anything? Now, I know VA and FHA, there are probably some differences in what they have to pay out of pocket in the whole process. So, on the appraiser fee, because every buyer, I don't care how much money you got, it's always, well, what does that cost? No one wants to be shocked. VA, FHA, in terms of their inspections and their appraisers and their fees, is there something the VA, the VA benefit is a benefit for the right reasons. So you have to be qualified for that. So we civilians can't say, what about us? You know what? There's differences. So in terms of who pays and how much, generally speaking, if you don't know the cost, that's fine. But does the VA get any extra benefit in terms of who pays for an appraisal or an inspection? And with FHA, is it just like a conventional where buyer pays, for example, like from the lending side?
It's just like a conventional loan. So the veteran will pay the fee, and for FHA, the buyer pays a fee. The government appraisals may be about $100 higher. So you're looking at about between $5 and $550 for a conventional loan, and about $625 for a VA or an FHA appraisal.
Yeah,
but the difference with all of these loans is you can negotiate conventional, VA, FHA for a credit from the seller. If you, as the agent, recommends that might be something you might be able to include in your offer, you can ask for a seller credit. So then that seller credit could offset some of those costs. And truly, if you had all your costs covered by the seller, you could be reimbursed that appraisal fee. So
yeah, there are some times, not everybody, no one has to do it, but sometimes they do it where it's when I submit the buyer who's a VA with the loan, and I say, hey, here's our offer. We're just asking, and we want to be fair to everyone. Say, would you mind? Could you help cover some of the costs? They can afford it. It's just that we would want to try to contribute what we can to make it as painless as possible for everybody, but especially the vets.
Yeah.
I mean, not to say it's the least you can do, but it's the least you can do is help. So far I haven't had anybody say no, because if you're making, $60, $80, $100, $300,000 in profit off a house as a seller, what's like $100, $200, $300 for a vet? There are times where I work with a family where they can afford it, but they can't do any more. And you know what? That's justifiable. We're human.
Right.
Hey, Mr. Seller, their loan is solid. These people are good people. They love the area. They want that school. We have a pretty good sense that you're obviously profiting really well on this, and that's not our business. But would you be so kind as to help on this? And when laid out correctly or respectfully, people understand. Because if you're selling a house and your net profit is $2,000, you shouldn't be selling the house, I think, because then you can't do anything for yourself, let alone for somebody else.
Right.
But it's all about being human. I've had one person actually insist on it as it was a conventional, and they said, well, my client just needs the help. And that's not the way to ask.
Yeah.
So rule of thumb is just ask nicely and justify it a little bit, especially for the vets.
Yeah. So speaking of solid deals, I didn't talk about FHA yet. So let me just kind of go over that a little bit.
Oh, yeah.
Because when you're looking at offers and you have a FHA client and a VA client, sometimes those are more solid than a conventional offer. And the reason being is because both those loans are guaranteed by, Federal Housing Administration and Veterans Administration. And so they offer a little bit more flexibility. If you have that first-time home buyer and maybe they have limited credit and their credit score is 660, it's not 760 like a conventional loan, they're going to get a pretty decent interest rate on an FHA loan versus a conventional loan. And so sometimes, agents will call me up and they say, hey, I've got this conventional offer with 5% down and I've got this FHA offer with 3.5% down. I'm thinking that conventional is better because it's more money down, but just because it's more money down doesn't mean that it's a better offer or more solid, as you referenced. With FHA, it only requires 3.5% down. And for a lot of people, there's a reason why they only want to go with 3.5% down. It could be because they've been building money in their 401k. It could be that they've just been saving and they're recently out of college and that's why they don't have the credit score. And also, it does offer a little bit more flexibility with the debt ratio. So sometimes I'll have a client who has a really good credit, but FHA still might be the better option. So I always try and talk with the agents and offer an explanation as to why I'm going with a government loan.
So, and what you're trying to say in the nicest way is, you don't want to just, when someone says, I want an FHA, you go, here. You at least look at what they have and say, okay, based on what you're giving me, I want to give you some options, and they can have the responsibility of choice. Because I think some people don't realize they can actually have a choice. They probably follow the stereotypical, I went to the bank, I filled out a form, it took a month and a half, and they said, here you go. And that's okay. I mean, if they're going to give you money, God bless you. I just hope the fees and the interest rate work out and the speed, which they're not known for. So this is why I prefer, but I don't steer people. I just make an option. That's why you are, in my opinion, a good option to present to people. Say, look, if you want someone to collect your data one-on-one, not in a big bank where you got to wait in the lobby, you call it 7:30 at night. I worked all day. What do you need? Oh, you need my last 2 bank statement on PDF. I never did that. Oh, what's that, Lynn? Go into my bank, click on statements, drop the pull down menu. Oh, okay. You kind of don't get that in a bank. I mean, there's probably some bankers who do, but people like yourself, I would think, are more motivated and have the interest and the inclination to help walk people through the steps, to answer those questions, to present options. If you want this many options, you want that many. Now, you don't want too many because people can't make a decision. Even I wouldn't. But I would like to think, just to overgeneralize this, and I know this is not 100% accurate, folks, just overgeneralizing. Banks have options. I would like to think Finance America probably has a lot more options because competition, even with real estate, competition is good for business. So people like Lynn and myself, we try harder, we think more deeply, and generally speaking, more thoughtful, because I'm not a multi-billion-dollar bank or multi-billion-dollar, corporation. I'm a guy who works. Lynn is a lady who works. We take care of our families. So your success, the people watching, the buyers and sellers, your success is our business. So we want to make sure we do things right and as safely as possible, give you options so that we have a relationship. You can have a relationship with a bank. It's possible, I guess. But when you have a team, and am I pitching us right now? You're darn right I am, because we're good at what we do and we care. And that's why we do this. So this is why with the VHA and FHA, we were talking about this, and we have so many other topics eventually we'll cover. But Lynn, please add into the fray.
Yeah, well, I mean, one of the things you talk about, I mean, there's a reason why I choose to work for a mortgage company, a direct lender, versus a bank. I could work for any bank, but, for some reason, I don't know why, but the banks don't typically offer, or they don't promote government loans as much. I'm not sure why. Perfect example is I have a real estate agent who, she's working with this buyer who had an approval from a bank, and every property they're looking at, they won't accept their offer because it says it's a 45-day close. And so she said, I would like you to contact my lender, Lynn Nelson, and because the deals that I'm closing with her are 30 days or less. And and we prioritize purchases. In this environment right now, there's a lot of lending going on right now, and it you have to have your team. I have my team. I have my assistant. I have my processor.
Mm.
I have my marketing person. I have my team, and it's invaluable to me because I can prioritize what needs to be done. We have we have to make sure that my purchases, that my clients do not put their deposit at risk. And so ultimately this client came over to me. We just got an accepted offer because it was a 30-day close or sooner, and the bank couldn't offer that. As it turns out, my rate was better as well, but that's besides the point, because rates can fluctuate and we're always close. But for me, my number one thing when I go to work for a company is the service and the rates that I can provide to my client, because then the referrals come in, then, that's how we make our monies from referrals. So
That's true, because we don't have a multi-billion-dollar marketing budget.
yeah,
If I did,
yeah,
wow, I would own Irvine.
right.
But that said, that's something as a real estate agent myself. And folks, I'm being honest. Part of my job isn't just get the deal closed. It's literally looking at the whole picture about your success. It's about your success. I'm only successful when clients are. So I know that when I contact people like Lynn, and I say, well, Lynn, one of the things I really want to be able to do for the people I would refer is speed and convenience and accuracy in no particular order, because sometimes a seller, and of course the agent, but the seller, they would not want barriers between them and their net check. It's fine for a seller to want a good net check. I get it. My sellers want a great net check too. That check
Right.
at the end of escrow. What they don't want is someone getting in between that, like time. Oh
Right.
no, you need 3 more weeks to do what with that loan? Oh, we cleared 2 out of 3 contingencies. You're
Well,
asking for right? They ask for extension of time, and a lot of times, and that's what I've been doing for the last few years, is the lender and the buyer. Hey guys, let's get everything done as much as possible up front, so that it's easier when we get into escrow, and everybody's happy, and we save time. Not rushing, but we save time. People want what they want.
right. Here's the other thing that we can do, or that I can offer, is if I have a client who's looking for a property, especially if they're a first-time home buyer, or if they are somebody who needs to sell their property to purchase, I get that loan approved, not just through my automated underwriting, but also through our actual underwriter, because that's going to go a long way when presenting an offer, that not only have I reviewed all the documents, but so has my underwriter, and I have an approval. So that's important to have those flexibilities, and it helps gets your offer accepted.
Yes, making sure. I think the world, well, at least in this country, people are incrementally over time realizing, on the buy side, they're realizing, wow, I really got to get this loan like fully ready as much as possible. And on the sell side, now I've been doing this already, where offers come in, I want to contact that agent and the lender and say, how, generally speaking, how well prepared is this loan? Is it going to be able to close? Now, lately on the MLS, in the MLS, there's usually notes to agents, to each other. So if I were to look at a property, I go down, there's usually a note the listing agent will put in there that I can see. Now, an agent should actually look for that, because you never know what notes you. For example, agent remarks is what it's called. Loans need to have DU underwriting and provide documentation to back it up. Also, buyer must provide bank statements with the account number redacted and blacked out. I see that a little more often. Why? First of all, if you're selling a house, now we're all learning, meaning the public, is that loan going to work out on day 21 of 30 days, or is there an
Right.
issue? So if I'm selling Lynn's house, and if you need to sell your house, call me. Please.
No, I've been here. I've been here 25 years.
Wow, someone's got
Yes.
equity. So the point being is, if I'm selling the house, in the agent remarks, I'm going to put all offers must be accompanied with DU summary, last, financial data to back it up, i.e. last two bank statements, accounts redacted out. I mean, you can even have the client's last name redacted, because when the loan gets processed, we're going to be like, well, here's what you gave us. What happened? So sellers and agents incrementally are getting a little more fickle in the right way, where if you, the buyer, for example, were to go to Lynn and she sets you up with a solid loan and we get together and go buy a house, when I see the agent remarks, the last 2 months bank statements, DU approval summary, a letter of approval, lender's contact information, you and me and you, the buyer who's watching, would go, well, we got that. We're set. Everyone else trying to buy that house goes, oh, geez, wait, hold on a second. I got to call the bank. Oh, it's 6 o'clock at night. They're closed. I have to wait till tomorrow. Oh, you mean you didn't call Lynn?
You covered that perfectly, Tony. It's important, and that's why it's important to do that pre-approval process.
Get it all up front. Because if you're think about it, if you're everyone at one time was 16, 17 years old. We all were. Now, not everybody went out and bought a car, but let's say we're all 16 years old and you want to buy a car. As a 16-year-old or 17-year-old buying a Corvette, the last thing you would want to hear from the person buying the car with you is, okay, we'll come back next week. Wait, we went out shopping for a car? We can't buy it now? Oh, come on. It's the same analogy. When you're going to go buy a house with a VA, FHA, conventional, whatever you're going to do, the one commonality in all the loans is be prepared, and be more prepared. So when a seller asks for particular things with the offer, you already have it. How awesome is that? Oh, you need those documents too? Here, let me take care of that. Click, click, click. There you go. Right. Oh, wow. So now when they get 10 offers and yours and one other is well prepared, now you're competing against maybe one or two people, you hope, or you have 12 offers and you're one of two or three. It's a good position to be in. So with the VA and the FHA, generally speaking, and if you guys missed anything, scroll the video back and double check. And if you need particulars, because everyone's different, contact your lender. And Lynn is right here. So, hey, if your lender's not out there socially sharing some stuff, and Lynn is, maybe give her a call. Start there. Why not? So that being said, you could call Lynn and say, Lynn, here are my particulars. What do you need to know beyond that? Answer her questions, get her documents so you can get the answers you need that's relevant to you. So if we work together as a buyer in this case, number one, Lynn and I obviously have dialogue. So if you're looking for an agent and a lender as a team in one shot that's cohesive and can get things done, am I pitching us? Yep. I'm not making no bones about it. You guys are smart. You know why we're here. We're sharing great information periodically on different topics. And we hope that if you like what you hear, you like what you see, maybe you'll reach out to one of us. But you do have to start with Lynn. Meaning, if you're going to pick Lynn, start with her and then work things out to see where you are. So VHA, FHA, Lynn, are there any last minute new particulars regarding the VA and the FHA you want to tell the people really quick? Like in the last few months, did anything like, oh, something changed that you can share?
For example, the Blue Water Navy's Veteran Act of 2019, Purple Heart, if you have received a Purple Heart, you are exempt from the funding fee. And the funding fee, depending on whether it's your first time use, could be 2.3% of the loan amount, or a subsequent use, if it's your second time, could be 3.6% funding fee. So if you have a Purple Heart, you're a disabled veteran, you will be exempt from the funding fee. So that's one fun fact. But other than that, just like you said, let's have the dialogue. Let's talk about credit scores.
It's not scary, folks.
And
it isn't scary.
Let's go.
The thing, and the one thing
for having me, Tony.
You are so welcome. And I want to finish my thought with, for buyers, if the buyers, now we got to talk for a second. So no one else is listening, just us, okay? Between me and you as a buyer, everybody, for some reason, doesn't like talking about their finances, their credit, and their debts. If there's One time that I'm aware of that you're supposed to share everything is with the lender. The lender who's working to get you money, $300,000, $400,000, $600,000. If you want that much money, you have to share the information. If you don't know what you need, perfect. There's a phone number right there you could call and say, Lynn, what do you need from me? And she might ask for, who knows? She might, what is it? Sometimes you might ask if you have human resources at your job. You need a letter that verifies how long you've been there. Maybe the program that you offer them doesn't need it. I don't know. But there are going to be questions. Just answer them. And then that's what you need to get the trust from people who want to give you money to buy a house. Unless you have $800,000 in the bank and you need a loan, and you actually need a loan, well, no matter how much you do and don't have, when you ask for hundreds of thousands of dollars or $1 million, don't balk at the questions. Answer them, provide the truth, provide the facts. When you get that done up front, everything else is not easy, but it's easier. So
that's correct. Good.
And it's true. Sometimes
Yeah.
people got to give a little tough love. And I believe that's the honest approach. Talk to the lender, call Lynn. What do you need? Get the answers. She'll have more questions. Get her the answers. Get that hump done so we can do the fun stuff is go look at properties, make offers. I do what I can to make the connection, see if we can get in, make sure the house is okay, get our contingencies cleared, assuming they can be cleared. And if not, we'll work that out and get you into a home. This way the seller can close and walk away. You have the keys to your house. Everybody wins. And that's what I said about 10 minutes ago. Our job is to make you successful as safely as possible, and it starts with conversations. Lynn, I think we covered everything in this topic within the time frame. There's going to be so much more, but for now, anything else to add, or are we done for the moment?
No, thank you. Thank you for having me here, Tony, and I look forward to the next session.
Yay. These are like coffee conversations. So tell me about that, Lynn.
Yeah.
And Starbucks, yeah, I know, my morning coffee. Hey, folks, thank you so much. Lynn, stay on the line for a sec. Everybody, I want to say thank you very much for being here. I really appreciate your time. If you're watching this as a video, I hope we gave you something of value. My intention is honestly to share information with you. Ideas, people, how to answer questions. You guys can always, text, call, email, messenger me. If you have topics, if you have questions that are on your mind, you can always reach out to me directly on my phone number, which will be below the video, or through the Facebook Messenger. You can call, email. You want to ask it anonymously, like just between us. I can always say it on the air, but not say who you are. That's fine too. So do check out the website below, the tonybabarino.com/events. And it's there. I'll put new, different upcoming events. Some people I do bring back so we can share more things with you. And we do this because I want you to know who I am on one side of the coin, but mainly I want to be able to be helpful to you because it's part of my job is to be of service. It's not always about money. So I'm providing this help. I'm providing information, hopefully a little entertainment. If there's anything I can do better, please let me know. I'm always looking to do better. This show is for all of you. And I hope that we get to know each other a little bit. And at the minimum, I hope there's some nuggets of knowledge you take away from each of these conversations. So thank you so much. And of course, thank you to Lynn. Thanks, Lynn.
Bye.
Okay, thanks everyone. We will see you again soon. I will see you there. I will see you then at our next event, and we will have Lynn back on for other topics. So check out the website periodically. I can always put you on a private email list. If you're interested, please let me know. I do not spam. I hate that. Anyway, thanks a lot, everyone. We'll see you again next time. Meanwhile, be safe, be well. We'll see you there. We'll see you then at the next live stream. I'm Tony Babarino. I'm a real estate agent with RE/MAX Premier Realty in Irvine, but I work all over Orange County. Lynn Nelson with Finance of America. We thank you for your time. Thank you for watching the replay. For watching the video, we do appreciate it, and we will see you next time. Thanks, everybody.
Thank you.